When talking about university enrollments, we can look at the macroeconomic, but we also have to peel the onion back and look at a more micro level as well, defined by university selectivity. So by way of example, with a base of about 20 million students in college today, enrollments were down this year by 1.1%. And last year, they were down 2.1%. However, if you look at the most selective universities in America, those that, by way of example, accept 50% or fewer of their applicants, it's a totally different story. This year, those enrollments were up 0.6%. Last year, they were up 1.1%. So targeting your universities and understanding where the demand is the key to understanding enrollments. So pre-leasing nationwide ended up at 93.7%, and for the Tier 1 universities ended up at 94.7%. Both of those were up between 2.5% and 2.7% over the prior year. So a great year in pre-leasing. Looking forward into 2023, the pre-leasing is already up by 7.4% over last year's very strong levels. So we're forecasting very, very strong mid to high 90s occupancy in student housing next year. So rental rates are up. Like all housing across America in this inflationary environment, while the inflation factor is up, it's directly correlating into student housing as well. So student housing rates are up 4.9% last year, and already in pre-leasing are up 6% for next year. So in regards to the debt financing markets, well, those have constricted like they have across all commercial real estate. Student housing has not been immune to tighter financing markets. So rates are way higher, loan to values are lower, and underwritings are more stringent in this particular marketplace. We're expecting that's going to stay for probably about the next 6 months or so at least. So the buyer pool, what has happened in this environment of rising interest rates and inflation? And the same again for student housing, very similar to all commercial real estate. Many institutions are standing on the sidelines. They're trying to understand what value impact there has been given the interest rate environment and waiting for transparency into that. So there's been less activity that's gone on in the buyer pool, more standing on the sidelines looking for transparency. Investment sales, what's going on in investment sales? Well, 2022 is going to prove to have been a much slower year than 2021, given the continuous rate hikes that have been implemented by the Fed. That's impacting the buyer pool, with many buyers standing on the sidelines. What that does mean, however, if you're a buyer not standing on the sidelines, it's a really opportunistic period of time to be looking at good investment opportunities. Valuation impacts. In discussions with brokers, because many of these are on deals that are still in escrow, there has been an estimated 10% decline, in the value of student housing, is similar to other housing that's going on out there in the marketplace as well. And we're also forecasting that that is going to be temporary and that values will return when interest rates decline. And the experts on interest rates in the economy are looking at the third quarter or fourth quarter of 2023 for rates to have peaked and then start to decline again, moving back towards where they were before a recession was on the horizon. The 2023 student housing outlook is incredibly strong. Occupancies will be the highest they have been in years, especially at top-tier universities. The investment sales market will be slow in comparison, but very opportunistic, and a great time to look for value-add opportunities with a 2 to 3 year investment horizon for when we get to 2 years to 3 years from now. The market should have recovered, interest rates should be down, be a great time to sell value-add properties that were acquired in 2023.